So I talk a lot about profit taking in many of the videos I provide on YouTube, but what I want to do in this video is actually delve significantly deeper into the matter of profit taking, the psychology behind it, and giving you a bit of a deeper insight into why and how you should be doing this. The problem is with profit taking is people are very scared in crypto to part with their coins, and you have to learn to detach. A lot of this attachment to cryptocurrencies are built off the basis of narratives where people are essentially at this point in time convinced that cryptocurrencies are preferable to fiat, which is incorrect in my opinion. And you must not forget that at the core of all of this, your goal is to make money and you are merely investing in this sector. Now, one of the biggest arguments I am consistently faced with is the discussion of taxes. Now, I don't have that problem anymore, fortunately, because I've now moved to Dubai for that particular reason, as it sickens me to the core. However, this is an unfortunate reality of life, and you must be willing to accept that. Many people say to me, well, if I take profits now, I have to pay taxes on that. I'm far better off holding. That's actually completely false, because in most circumstances, by entirely holding everything, when it comes to the bear markets, you are faced with a situation where you have no profits left. In fact, you're stuck in drawdown. So, in response to those questions, my simple answer is always, or even a question, what would you rather? Have profits that are taxable and have money left over after taxes, which is far better off than having losses? Or would you rather hold everything back down to the ground and be in a situation where you are where you started off, if not worse off, and you cannot even close your positions because you have a fraction of money left? I personally, after taxes, would rather have that money left over, even with taxes extracted from the equation, than be left in a situation where I'm holding worthless coins at that point for a fraction of what they originally were. I'm going to show you some real life examples with my portfolio, some of my previous trades, buys and sells, and more of a psychological breakdown behind why this is absolutely crucial and why you need to be doing this. You, at the end of the day, are investing. So you must be taking money out along the way. I'm going to be showing you not just the psychology, but also reasonings behind how you can sell, make money, and still continue making money in the process. And until you really do this and put this into practice, you won't truly ever realize, because you're always in a situation in the beginning where you're very scared to part with your coins. And unfortunately for many people, despite the fact they've been through several cycles with nothing to show and holding their bags and round tripping back down to zero, if not worse, they don't really learn their lesson. And we are very scared in the initial phases to part with our coins. But once you understand how to part with your coins, it becomes a liberating feeling and it will open the doors to numerous opportunities for you. I'm going to show you exactly how. So, the very first thing we want to do here is compare previous cycle and existing cycle returns alongside bear market total drawdowns across the key major pairs BTC, F, XRP, and then compare these results to something more traditional such as the S&P 500. Now, the reason I do this, and this is something I've probably shown before and something I frequently show members inside our app, and the reason being is we forget just how much is on offer in crypto. We also forget that this may not last forever. In fact, even now in this current cycle, which will probably wake you up a little bit, despite BTC being at record highs and achieving over $120,000 per coin, it's theoretically significantly underperforming in comparison to previous cycles. And that pretty much goes for everything. Now, what we also need to remember is that crypto is a highly speculative market still. Now, there are arguments again, ETFs have changed the game, etc. But for me, in my opinion, this is still a very speculative market that closely mirrors the dot-com boom and bust. And eventually, something could happen that may completely break apart from what people are currently experiencing and believe will happen before the market resets and goes back to normal. Irrespective of my opinions, nothing should be left to chance, and you cannot compare this over here to these three coins over here. It's a completely different market, completely different mechanisms, and whilst you're not early, you are not late either. So we're in the midpoint of crypto, I would say, where things are not truly historical enough, and we haven't seen enough historical data to truly gauge what will happen in the future. That also goes for everything. But the point here is there is money here being presented every single cycle. And there is money being robbed of us every single cycle in the bear markets. Your goal is to detach from these coins. Your goal is to remove the belief that you must hold these forever. Because a lot of people have this problem where, let's say you're holding Bitcoin and you have a target of 100K. The issue is, what is your end goal? Because most people will say, I'm going to hold this until a million, or I'm going to hold this until 500K. But you don't know if that's ever coming. The same as XRP going to $100 or $1,000, or in recent predictions, I've seen 500K, whatever. Things are crazy. You have no guarantee the future will bring those prices. Therefore, the first thing you must really ask yourself is it worth losing what you have now in hopes of more? Now, that is generally the case for most investments, but in something like crypto, which is significantly outperforming every other market, I would say you can solve that issue in one key way, and that is to not sell everything. You should know by now I have a rule: never sell everything, but never sell nothing. And the key behind this is you must understand you have a limited window every cycle. And you do not need to be a genius here. Of course, you can, in theory, just hold. But there is wasted opportunities in holding. And many have this misconception that you must be this expert trader that has to pinpoint buy bottoms and pinpoint sell tops and then get back in at the perfect time. That's not necessarily true. And as a matter of fact, even if you were to exit at 30% of the cycle, 50% of the cycle, 70%, 80% of the cycle, and not perfectly time the top and leave with a profit, you are far better off than 99% of crypto traders who do not sell anything and hold everything back down to the ground and lose the entirety of their money. So when you understand that there's a limited window, and it's not a secret that there are bear markets, inevitably a new bear market will come. So your goal is realistically to make as much as you can in that bull cycle, not in the form of unrealized gains, but in the form of realized profits. So when the inevitable bear market comes, simultaneously not needing to time a perfect top, and just showing a quick example that if you bought, let's say, BTC at $30,000, do we need any of this? I don't think so. Very interesting choice of emojis. If you bought BTC at $30,000 and sold, let's say, at 100K, you've still made a significant profit, and a great profit compared to what you would achieve here, which I'll show you in a moment. But let's just say you've sold here and price pushes higher. Well, the first thing you need to realize and first thing you need to detach from is the ideology that selling means selling everything. That's not the case. And only if you're comfortable doing so and happy with your profit should you do that. Furthermore, there's actually nothing wrong with taking all the money out if you're happy. A lot of people hold on for more, but simultaneously we have real world responsibilities, real world priorities. We probably have families to feed, we have ourselves to feed, we may have debts and bills. The money you make from this market should be aiding you in real life. You should not be suffering in real life in desperate hopes of the market providing you more, because if it's not realized, it's not real. But let's just say now you've sold here, maybe 50% of your holdings, and the market continues pushing higher. You're still making money if you're still holding. You will not be making as much as you have mentally gathered in your head, which is what we'll be covering in one of the next segments. But you are still making money, and there will have to be a point where you realize something. And one of the biggest setbacks for us is we buy a set amount of coins. Let's say at $30,000, you buy 5 Bitcoin. You've now calculated in your head that if it hits up here, you will have XYZ amount of money. And having that is one of the most dangerous things mentally, psychologically. It will impair you because you are now scared to take profits because you've convinced yourself of this predetermined number that has no actual guarantee of being achieved. And quite frankly, the market doesn't give a flying fuck about your hopes, dreams, and desires. The market is the market, an independently, in my opinion, manipulated entity that will do whatever the hell it wants, irrespective of your beliefs, hopes, and desires. Therefore, you must understand that You're in a limited window cycle, in a limited window playground. You don't need to be perfect here because even if you sold there and took 50% profit, and then the market in the next bear market was to drop down, you would still be better off than holding everything here. Because the profits you take from here, even if you bought slightly higher, you would have more Bitcoin than you would have had here by taking profits and reinvesting lower. That's the beauty of this, and something I'll be breaking down for you. You are able to protect yourself, and this is the key behind profit taking. You are able to put yourself in a position where, let's say you bought here and even sell there, and the market comes back down to that price or even lower. You are able to acquire more holdings while simultaneously protecting yourself along the way. Now, there are several ways to engage in profit taking, and this is something we cover in our app. I'm not going to be breaking down the strategies. We have a profit taking guide in the app. I do it myself live with my trades. I'm not going to be breaking down the additional strategies, but we're going to be given a basic concept on this. And I think the first thing we need to show here is what the market has offered and what you've likely taken for granted in comparison to what you would get elsewhere. And once you see this comparison, before we even continue further, I hope it's going to open your mind to realize that what we achieve and what we are given in crypto is superior to just any other market, in my opinion. So let's look at BTC from around and starting off from the 2017 cycle. Now, we can theoretically start this off from around here, which is in this particular instance, which started off from around 2015. From low to high, this was where things really were just absolutely insane. And we saw BTC in up to the 2017 peak, it achieved almost 13,000%. Now, of course, not everyone was in at that point in time, so we can't use that as a completely factual basis. But of course, it's an example of what was achieved in that cycle. Now, when the bear market came, this ended up doing around an 84% drop. Now, of course, this is dependent also on the fact of buying at the Pico bottom or not. But before we delve further and show you the continued examples of all of this, you first of all must realize that every cycle, of course, is limited. Therefore, you have one goal, and that is to make as much money within these cycles as possible and protect yourself as much as possible in the bear markets. You do not need to perfectly time the tops, because you can even see in this instance here, most people would not have really jumped in if they were involved in 2017 onwards, probably around the end of 2017. Now, the entirety of this is around 13,000%. We'll call it 13,000%. You don't need to get all of this, but knowing that there is this much return on investment potential, maybe not anymore, and I doubt we'll get this anymore, but knowing there is that much potential, even if you bought up here, it's still 500% as an example if you bought at 3K. Even if you bought at 6K, it's still 200%. Now, it isn't remarkable and it isn't life-changing money. And the issue is if you have limited capital, you are seeking thousands and thousands of percent ROI. But you also need to be a bit more realistic and understand that if you are starting with that amount of capital, that's what you're working with, and your returns will be based on that sum of money. So the percentage is the most important factor here. You do not want to be blinded by these prices. And you'll see this shortly in a moment. Because the higher the prices go, they deter you from the fact that the percentages are actually getting smaller. So let's say you have £100, $100 or €100, and you've put that in there and made 200%. You should be happy with that. Because over here, as an example, just to start off straight away, let's say 200% was achieved here from October 2017 to basically December, a very short window of time. Let's say you bought there and made 222%. Now let's go back to the S&P very quickly and go to October 2022 and drag this up to where it is now. And we will change that to green to represent a rising market. Now you can see in what was just several months, a 221% gain. If you had invested in the S&P in 2022, almost 3 years later, you would still have less than half of that. And if you were to have made that return on investment, you can see you would have approximately had to have bought this thing to make the same exact return, let's just keep going until we can get into that region, you would have had to have bought the S&P in 2016. It would have taken you almost 10 years to have made the same return on investment that took just several months. That's with a limited buy, bearing in mind. So leaving this here, and we will place this at around. So what I will actually do is go to a 3-month chart and go to the absolute lows around 2009. And just to give you an immediate idea that from 2009 to 2025, this hasn't actually done 1,000% yet. It's done around 872%. I think that alone should show you the vast contrast of what is being achieved here. Now, if we place this back to the cycle lows and go to there, of course, the numbers are striking. And we're going to continue this process. In 2018 to this region here in 2019, in the little mini ball, it's 344%. For the S&P to have given you that, you would have had to have invested around October 2012 and held all the way to the present day to make the same return on investment. When the bear market came through, it was another 72% drop. We'll make that red. Now, obviously, things got very magical in 2020, and we drove all the way up for around a 1,700% ROI. This took place from March 2020 to the peak in November 2021. Now, to have achieved that return on the S&P, you would have had to have invested approximately around 1991 and held all the way to the present day to have made the same returns, which in this window took just over a year. Not too bad if I say so myself. Now, the key to understand is this is from peak low to peak bottom to peak top, sorry. In the same instance here, if you had not perfectly timed this area and had bought anywhere up, you're realistically diminishing returns. So the opportunity in cryptocurrencies are remarkable, to say the very least. And if we continue proceeding lower, every bear market is pretty horrendous. Now, this is where things get interesting, and we're going to enlarge the chart for this, because in this particular cycle, we're at the highest price we've ever been. Yet once we draw the percentages of this cycle, you will see they are significantly diminished at this point. And most people are completely blinded by the prices we're at, not realizing that it's actually significantly underperformed in comparison to previous cycles because of where we bottomed in the previous cycle. We were no longer starting at these particular prices. Now, what's also worth mentioning is a lot of people have the argument that it's better off holding, but that's only true if you really bought at somewhere in these regions. And even if you had bought somewhere here, let's say here, and held the whole way up, it's still in theory only around a 475% gain, which is also why entries are absolutely crucial, because the higher you buy, the less you really have to make. And unfortunately, the longer you will have to hold, which is one of the largest contributing factors to unrealistic price predictions. Of course, someone that's willing to buy at, let's say, $116,000 is going to tell you that, yes, we're going to $1 million, because if you're willing to buy at those prices, you have obviously convinced yourself it's going much higher. But of course, there is an increasing danger with buying higher as well. But putting this into perspective, what would happen now if this fell back to what has generally happened around most previous cycles? Not that this is the top, but let's just use a rough example and say if this came back down to those lows, it would be an 87% loss from the high to around the previous low. Of course, even if you drag it up a bit further, 70%, 80%, it's going to be down in that region. And of course, if we do push higher to, let's say, 150K or so, this would only logically worsen if we came down into this region. So of course, even visualizing the market like this from the offset, and I'm not saying this is the top, by the way, but what I'm saying is just as a visual, it can help you understand not only what is being lost. Now, I'm not going to say 700% is awful. It's actually very good, but that is but on the basis that you bought at $15,500. So realistically, If this is what the cycles are providing, and logically at this point diminishing returns, you need to ensure that you are capturing as much of this as possible because it's happening regardless of how long it feels, especially this cycle. It's very different in terms of how much longer it's really taking. It can seem like it's taking eternity, but when you compare that to the S&P in the current cycle, you would have had to have bought this. Realistically, you could have bought it here as well. So let's not cheat the system, but you would have had to have bought this in 2008 up to the present day to have achieved the same returns on Bitcoin. So it's not just what is being capitalized on and what is being lost out on in every cycle. It's also what is being lost by holding the whole way down. Because if you are holding drawdown of 84%, or you are seeing your portfolio achieve these highs and then lose 70% of its value, you're wasting opportunities, which do not need perfection. Because even if you bought this at the Pico bottom and sold here, you would be far better off. And when I say sell, again, the key word, which I'll be showing you after, is not to sell everything. It will diminish your returns, but the key behind this is it guarantees you leave a winner. Because when the inevitable downturn follows, anyone that took profit somewhere in this region is going to end up better off than someone that held the entirety of it. Now, going over to altcoins as another comparison and going back to Ethereum, which is theoretically in the same diminishing returns prospect. Now, we can really base this off a similar sort of level and go up to the top first. Now, of course, altcoins were and generally are superior in terms of returns. And we can see from around that point of $2 from where the party really got started, this ended up doing 66,000% and peaked at the bottom at a 94% loss, or a 90% devaluation in the bear market. Now, in that 2019 miniature cycle, we can kind of consider that the same miniature cycle. It looks like Ethereum significantly underperformed. You look at that in comparison to BTC and think, hold on a minute, look at BTC in 2019. It went all the way up to the previous high around 14K. Well, guess what? Ethereum still outperformed BTC in the 2019 cycle, which is why numbers can be significantly blinding because it actually performed much better. Now, applying this same concept to the downside, Ethereum was also somewhat worse when it came to the miniature dip and the miniature bear market we saw in 2019. If we then shift over, you'll start to see a rather vast difference. If we apply that very bottom from the COVID crash up to the top, you will also see within the 2020-2021 cycle, Ethereum went on to achieve 5,420%. If we then drag this down again, continue the process, it lost 81%, where BTC lost 77.5%. Make that red and let's continue. Now, logically, at this point in time is where differences begin to be made, but you can see Ethereum here. At the same time, BTC basically topped to make this high. Ethereum dropped significantly further. Now, whilst this drop took place, it's up for debate whether or not you want to classify this as a bear market or whether it's part of the overall bull market. I'm going to classify this as part of the overall bull market, but also just as an example, before we continue, that was still a 66% drop from complete top to bottom. Now, when you look at those numbers, they're sickening to think that all you had to do was not be greedy and sell something. Even if you had reinvested there, the drawdown from here is, number one, significantly better off, but furthermore, you don't need to worry about drawdown if you've taken profits. Because if you've taken profits and price drops lower, which doesn't take a genius, you don't need to get the perfect wick, although that is always my aim, it doesn't need to be the case. Because there or there would have acquired you more Ethereum if you had sold anywhere here and invested it lower, which is of course the goal for many people. And whilst taxes will come into the equation and the argument always, let's be honest, you'd be far better off having something, even after taxes, which would acquire you more coins if that's your goal. But let's flip this over now and continue the journey for Ethereum at present and look at the moment at what Ethereum has done. it's achieved around 444%. So, of course, BTC may already be an indication that Ethereum needs to do a bit more. And once we see XRP, we could compare the two and possibly look more towards $8,000 to $10,000 if it was to catch up and take out the highs, which likely will happen at some point. So if we go to XRP, which also has mind-boggling numbers and simultaneously is again the die-hard cult coin, from bottom to top, XRP achieved around 71,000%. If, of course, you had bought at those very prices, and then in the bear market, went down 96%. Then in the bull, around 1,600, if I recollect. There we go. Going down, XRP then bottomed and dropped another 85%. And at present has done just over 1,000%, around 1,177. Now, the key is to look at this and just go, okay, in this window, of course, most people have not bought the Pico bottom. Most people will be in from 50 cents to $1. So if you've bought at 50 cents, you haven't captured the entirety of the move, but you're around 50% of the overall move. A 625% gain is still remarkable, by the way. And as always, if you go back over here, you would have had to have bought this in 2009 to have achieved the same return from simply buying this somewhere in this vicinity in 23, or even if you got the very bottom there, a year to 2 years at top, maybe 3 years. And even if you had held from here longer, the concept is you're getting this significantly faster. Now, what we also want to do is understand the differences in the downside, because of course the numbers here are rather insane. 80%, 70s, basically you're around 70s to 90% almost in the bear markets. And of course, in every cycle, people say this time's different, it won't happen again, but I guarantee you it will. And when that happens, people then regret their decisions. Now, your goal here is to realize not only what's on offer in comparison to other markets, but also to realize that the only time we really come to the realization we should have sold is when it's far too late, mostly down in these regions. And by simply just visualizing what is on offer and what is also taken from us in every cycle, it can allow us to really detach from the ideology that we should be holding these forever. Because whilst you can hold these for more and more and more, once again, by simply trimming something off, you are rewarding yourself for your efforts of holding in these cycles, which would of course taken many years, if not decades, to have achieved in the S&P 500. In the same approach of simply hodling. So if you're given double, if not 10 times the returns, it should not even be a thought in your mind to be holding everything entirely. Now, if we were to look at the downturns in very similar windows, they're not very big. You're looking at 27%. You're looking at 35%. And the last real crazy one was really this, to be honest. And that was again 27%. And the worst one was here during the crisis. If we just map that out very quickly, we can see that was around 57%. Now, of course, this is a very different market structure and things are rather different here. And you can see by the drawdowns, the vast contrast in what kind of market we are dealing with. This is the key definition of highly speculative, because no strong asset would significantly drop that amount of several, 10%. That's nothing. It's dropping 70%. It's dropping 60%. It's dropping 80%. That's the key behind a very speculative market, and is a key indication that we need to be more wary and take more profits off the table, which is, of course, now going to bring me to the next point. I think this is the most important way to start. So you can always just remember what you are being given here and what you are not taking out of greed for more. When in comparison to this, even if your entries are not perfect, you're going to be outperforming this. If you had Pico bought that last wick there, you would be up 33% right now. If you had bought XRP just here at the same Pico equivalent low, you would be up 127%. If you had done the same on Ethereum from the most recent swing low, which is all taking place around a similar window, it's 245%. If you had done the same on BTC, it's obviously going to be less, but it's still almost, in fact, basically double what the S&P is. So when you put that into perspective, you suddenly realize just how much is on offer here and how much is being lost in the worst case examples of the bear markets. So inevitably, we've been in a bull market for a while, so we must already start to look at the idea that this will not last forever. And inevitably, that bear market is going to come. And the dangers that come with that is another wasted opportunity. And we only have that realization when it's far too late. And the problem is with crypto bear markets, they're rather unforgiving. The bull markets, they happen pretty fast, and that's probably part of the psyop to keep holding. But the bear markets are painful in crypto. You're witnessing your portfolio bleed aggressively, and you just sit there wishing, just going, why did I not sell anything? Well, the purpose of this video is to help you make that decision to start realizing some profits. So let's move into the next segment. So the next thing we want to do is actually go back to the original point and many of the key arguments that people bring forward to me, which is, of course, well, if I sell now, I have to pay taxes. Now, again, this is a reality of life. This is a reality of trading in the world we live in. And inevitably, even if you were to hold for the long term, you will eventually have to pay taxes. Now, I'm going to go back to the same question I asked, because what would you rather? Would you rather at least have something to show? Or would you rather be the victim of these consequences highlighted on the chart right now? And it's often best to visualize this without the green, especially alongside the duration and the periods of downturns we see within the market. And the charts are a great way to represent the drawdown you would be suffering in these circumstances, and essentially a duration of how long you would be trapped for. So you need to look at these charts, and I'm going to go over BTC, XRP, and Ethereum as well to show you a kind of comparison between all of them. But the concept really remains the same here. Many people have this argument of, well, if I sell now here, or if I sell here, I will have to pay taxes. That is remarkably more preferable than holding this down all the way to the ground for 365 days for a total percentage lost from top to bottom of 84%. Now over here in the 2019 cycle, 274 days. That's not ideal for minus 72%. This was a large drop, and granted, short, but still a 2-month period in total, and a very similar period over here in the November 2021 peak, which also dropped 77% and bottomed after around 365 days, or at least on this monthly chart, 12 months, 2 months, 9 months, and 12 months. So when you, in that moment, look at this, you often forget how long you can actually be in drawdown for and trapped within the market. And our goal as investors is not to endure these periods with absolutely nothing to show for this. Instead, these are actual opportunities within the market, but they're only opportunities if you put yourself within a position to leverage and actually capitalize and benefit from these situations. So whilst things can often seem, in the moment, very, very slow, what you don't realize is whilst the bull runs are generally very quick in the grand scheme of things, minus the current bull run we are currently within. But inevitably, looking at this in the same way, when the eventual bear market does come into play, you must ask yourself the very same question. How long will this last? Considering this is arguably one of the longest overall cycles from bear market bottom to top we've seen, with approximately 33 months worth of upside, the question becomes, when all is said and done, how long will this take to crash? Now you need to remember, taxes are not really a problem, because if you hold these down to the ground, you will inevitably have a lot less than what you would do by simply taking just a portion of profits off the table. And always remember, you don't need to sell everything to benefit from this. and safeguard yourself and also leverage these opportunities in the market. Because to be holding drawdown, especially in the magnitude of 70 to 80% over the course of slowly bleeding in the span of a year, it's wasted time and it's wasted money, because you're trapped in the market with little to do, and your only other alternative is really to add more capital. But realistically, if you play this game correctly, you don't need to add more fresh capital than what you've invested, because with what you've started with is what you can theoretically continue playing with. Because if you're getting these opportunities, extracting even a portion of those profits and reinvesting will allow you to reaccumulate and ride every cycle, ensuring you leave a winner. And of course, whilst you can look at the grand scheme of things and say, yeah, but even if I bought here, I could have held the whole way and I would have been in profit. And that's very true. But you also need to look at the percentages of even buying here and holding for a 255% gain. When the reality is, in that period of time, you would have suffered a rather unnecessary drawdown of also 55%. And whilst you could theoretically buy more in this region to then recoup by the time you come up higher, that's not really how you want to be playing cryptocurrencies, to be honest with you. So if we go over to Ethereum as well and look at the similarities to this, again, we had 334 days going down to 94%, 274 days down to 75%, 212 days down to 82%. And over here in March 2024, whilst this was not the longest period of times, it technically was in the grand scheme of things as well. 400 days, almost 13 months, dropping 66%. So you must always look in retrospect and look at the reality of the situation, because yes, whatever the taxes may be for your geographical location, you're still going to be left off with more than being in a predicament where you're emotionally attached to your bags bleeding. And if anything, in that situation, you're more likely to actually capitulate somewhere near the lows. And this is something we frequently see within the cryptocurrency market. So you must look at this and take it at face value and ask yourself the simple question: is it worth holding all of this, being fearful of taxes and selling or even parting with your coins, when the reality is, when all is said and done in each cycle, the downside is rather horrendous, to say the very least? And of course, XRP in previous cycles as well, 2017, 2018, once it ended, 790 days with a 96% drawdown, 426 days over here in the 2021 peak and an 85% drawdown. And of course, over here, a 60% drawdown. And again, the question is raised: what happens moving forward when the next bear market inevitably strikes? And it's of course a very ignorant belief to be under the assumption we are not going to see a bear market ever again, because inevitably it will come. So always look at this, and this particular part, this video, lesson, tutorial, course, whatever you want to call it, I think is really, really important, just to visualize what the consequences of not selling are, and the excuses we make out of greed most of the time, and sometimes even ego, to not just take something off the table. Because when all is going well, it's very hard to pull the sell trigger, because you're looking for more and more and more and more. But all of this up here blinds us from the reality of what is just around the corner. So even if you had to pay 50% taxes here, that's far more preferable than seeing your portfolio surge the entire way up of thousands of percent in this instant, only to see almost the entirety of it diminished as well. You don't have to be a genius, but if you can at least sell somewhere on those pumps, then you will know when to sell, to be honest with you, because the moment it's time to start pulling the trigger, it will feel wrong. You will actually feel scared to part with your coins, because it will be at the peak of euphoria. Something we can see here continuously as well, as the market starts to rip through its all-time high. Have you noticed the pattern here? Every time there's a big bullish candle on XRP especially, the market then absolutely collapses. And the same can be said for here and over here as well. Every time that candle is there, emotionally, you are going to be made to feel to do the exact opposite, which is hold. Because when you're looking at your portfolio and the value is rising, you're thinking, well, okay, if this is at $3, then we must go to $4. And if we go to $4, you'll think we must go to $5. And you're doing the arithmetic in your head. You're calculating how much XRP you've got, and you're thinking, right, if I've got this here at 3.65,
it's going to come up to $4. I will have XYZ at $4. And then you start calculating up here. And that's distracting you from what's going on down here. Now, whilst this was not the biggest of drops, whilst we are trading rather higher these days, that's still a 50% drop. That, quite frankly, could have been leveraged if you really wanted to. Because whilst you don't need to necessarily sell the Pico top, even watching your gains drop, and when you really process the numbers, 40-50% depletion in your portfolio, for me, is insanity. And imagine you're one of those individuals that have held here now. A really good way to visualize this as well is if you're amongst those lucky few, and we have innovators that do this, and we even discussed this recently with some of the innovators, around 3.6, which I also gave you guys in the YouTube video as well, we had several members that were up, in the 1500% territory, and they were mostly waiting for the $4 region. And what's very important to do in this particular circumstance is to ask yourself a very simple question. And always put 2 feet back on the ground. Now, let's say you're in a situation here where you're up over 1,000% on XRP. You must also ask yourself if it is worth the risk, let's say, at this point of being at $3.66. I know exactly what everyone's doing here. They're looking for $4. Now, you must ask yourself if you are collectively up, let's just say from 23 cents at this point, you are up almost 1,600%. And you're waiting to pull the trigger at $4 because you want that nice, clean psychological number. That's a 9% increase. And even over here, in a very similar circumstance, at this point, some people, and hopefully anyone watching this is relating to this in many ways because they're likely experiencing this themselves. Now, at this point of being up almost 1,500%, and you're seeking $4, you're essentially risking an additional 17.78% profit and risking 1,500% in the process for 17% more. So it often takes this perception as well, an understanding of what you have currently. Because if this is to drop down, suddenly you wish you took profits up in this region and you suddenly realize the value of what you have. But you never truly realize the value until it's crashed, because in the height of these moments over here, you're far more fixated and greed has taken the wheel to convince you that you need more than what you already have. So imagine now you've made 1,500% of this region and you're expecting $4 and you want to hold out. Well, of course, the key is really simple. At the very least, you should be taking out your initial investment. Because if this is to break lower than this level, in terms of key support, well, it's rested on the very first level of support here. What happens if this level breaks? Of course, you move down the system, and logically, it's around 70, if not 50 cents. And if you start to see this eventually trickle down to this region, you have then essentially wasted and sacrificed 1,500% and could lose up to 80%, if not eventually 90% of that from that high over there. So you always want to look at it from that perspective as well. But what I'm now going to do is show you my current portfolio in the current stage alongside what I've recently done to give you a visual process now of what the goal for me is and to help you understand from a portfolio basis what your goal should be as well, to help actually give you some real life examples and help understand this much further. So now using one of my portfolios in the next phase of helping you visualize the process and also start to piece this together, because it's very easy to show you, theoretical examples, but using the example of the portfolio I show in my videos and the portfolio you've probably seen before. This is a 6-month time frame of the value of this portfolio. Now you can see there's a USD balance here of $224,300. Before I recently took some profits, this was at around $160,000. So I've taken a good chunk of profits as of present. I'm in a rather good standing right now, and essentially I've taken around 60k profit, and we can see I'm still up a rather nice amount. And I have not sold all of my positions. In fact, there's still more in terms of unrealized gains running. And visually, this can help you understand the process here. Now, you have a simple goal as an investor, and that's in the event we fall back down, specifically if the market moves up aggressively like this, you do not want to have the same balance you had prior to the pump if we return back down to those levels, which of course is always a risk in crypto. Because if this happens, you have wasted another opportunity to make returns that are far more superior than any other market. Again, that can be out of greed, that could be out of fear of selling, that could be because you're blinded by the fear of taxes. But for me, the fear of wasting an opportunity is far worse than any of those measures. Because we must remember, we do not control these markets. So if the market is providing these moves, and we are fortunate enough and have the tools to capture these moves, we should not let those moves go to waste. Because I treat it in that example of, you never know when this will stop. And you never know in the future, if you may look back one day, and I think this is really important, where you could look back one day and go, oh my God, I was up 50% or 100%, or I had this particular figure. Why the hell did I not push the sell button? I could do with that money right now. And you always need to look at it that way. Because we look at these theoretical numbers, just pixels on a screen 24/7, and never realize those profits, you become detached. You lose the true value of what is physically in front of you because you don't spend it, you don't touch it, you leave it in the fantasy fairy coins of cryptocurrencies. Now over here, you can see, using a 6-month time frame, in 2025 March, around the 10th of March, my portfolio balance was around $380,000. With my existing holdings, I had made no additional investments at this point in time. And we can see my portfolio rose and increased up towards a height of around $430,000, which was just the existing coins being held down, coming in to create a low and eventually increasing in value. Now, when we returned back down to the ground, because I did not make any additional investments, we actually went ever so slightly lower. But the minute we peaked at this region, this is where I started to reinvest. And this is what I was telling you about in the videos. This is where, for the innovation members and myself, we invested into 2 altcoins. Now, I didn't go all in with my balance, but both coins respectively made around 120 to 130%. So with what was invested in June, from $374,000, my portfolio with the new investments then jumped up to a height of $535,000. So the 2 coins I invested in each achieved over 100%, but the portfolio increased around 31%, which is a rather remarkable gain considering I didn't go all in. Now, if we look at this present moment, around this point in time, is where I started to realize profits. And that is where this balance started to increase. Now, this is the beauty of taking profits in intervals, using almost a checkpoint system. Because I now win both ways, and this is something I've discussed in a previous video, where my goal is to always put myself in a position where I quite frankly ensure I'm always winning in many ways. And because of this, and because of where we now are and where we've been trading, because I have now extracted $60,000 within this region, I have found a fine line and I have achieved my goal that in the worst case scenario, the market continues plummeting lower back down to this region, my balance will now be higher than it was before. But because I have not sold all of my coins and I invested in a very selective, calculated region, I also have more coins than I existingly did have when we were originally at this level before buying. So I've increased my USD, I have protected myself. In the event we roll back down, I now have more money back at the same levels than I started with. But simultaneously, my holdings have increased in the process. Now, I obviously am not exactly prone to taxes anymore due to being in Dubai. But even with taxes factored in, this still is applicable to everyone. You would still be far better off than wasting an opportunity of going all the way up and then all the way back down with nothing to show. Because then you've just wasted essentially months of doing absolutely nothing. Now, because I've also taken out a selective amount, which is also still less than the unrealized gains running, I can also now comfortably weather drawdown on the existing unrealized positions without being emotionally impacted in any way, shape or form. Because the money I've taken out as a protection mechanism has allowed me to be completely emotionless in the process of watching this go down lower. So your goal is not just to protect yourself, but it is also to grow your holdings and fiat along the way. As much as there's narratives to, avoid fiat and this, that, and whatever nonsense people come up with, every incline and every checkpoint higher, you need to be realizing some profits every step of the way, because eventually the market will roll over. And if you sell every step of the way higher, you will never ever be able to lose, and you will be ahead of 90% plus people in the cryptocurrency market, because most people hold everything and end up flatlined. Now, the key behind this is also to understand not only am I protected, and not only have I completely eradicated emotions from this process, but I am simultaneously still making money in the event we go higher. And despite realizing profits, now of course, removing an element of your holdings and a percentage of your holdings will diminish the gains. But in the markets we are invested in, crypto, the moves are so large if we break out higher. Whilst I will not make as much as holding the entirety of this coin, I will still be making a significant amount of money if we go higher. And I will show you these on the individual coin charts as well, so you can visualize where this is actually taking place, not just from the portfolio value standpoint, but where the investments are, where the sales are, and where future sales could potentially be. So this portfolio is still fluctuating, as you can see, on a continuous basis in a rather moderate chunk, considering we're currently just consolidating. So if we were, and as we can see here, at the height, $535,000, it then dropped down to $466,000. But because I'm still exposed to the market, the key here is I'm maintaining exposure whilst removing tiny fractions of exposure along the way. We then still go back up to essentially the same price anyway, because I'm taking this out in controlled sums. And the key to discovering the sums that are best suited for you are not necessarily based on a total percentage basis. In fact, my rules are really simple, and that is I invest what I am comfortable losing and risking, and simultaneously I take out a sum of money that is enough to keep me content that I've paid myself for my efforts and risks taken within the market here. But simultaneously, I don't want to sell too much, especially with where altcoins are trading. Because simultaneously, if you sell too much, you're taking a greater risk. And the goal here is to protect yourself if you're wrong and elevate yourself if you're correct. Whereas if I sold absolutely everything here with the sheer conviction it will go lower, if I'm wrong, I have just missed out entirely. But by doing this in the particular way I do this, I'm not only making money every step of the way, but I will continue to make money if things progress. So it works well both ways, because if this now drops back down to where I invested here, if not lower, I have an additional $60,000 on this portfolio, plus a total 224, to not be freaked out if this drops down. Instead, I have enough ammunition to leverage this opportunity, which is what I was showing you in the previous segment regarding the drawdown and the percentages. And instead of being trapped within the market without, dare I say, dry powder, leveraging those cheaper prices, I'm able to do the opposite. And I can strike confidently and comfortably, knowing that I've already got exposure and I can add more and do the same thing and work in intervals. So now I'm going to show you the coin examples so you can visualize this on the actual coins as well. But I thought showing you how it works on a portfolio basis should be very helpful as well. Because no doubt you watch your portfolio when it rises, and there is no greater devastation of a feeling than seeing what you had then be eradicated. The simple solution to that, and you can see where I started to sell, has currently been overall the top and is very well synced with the overall altcoin movements we've seen as well. I ensure at these moments when I feel, it almost feels scary to sell, and I'm sure you guys can relate to that, where you're almost like, well, this is inevitably going to rocket higher. That's the exact moment I decide it's time to pull the sell button and pay myself and make this an emotionless process. So let's jump into the coins now. Now, this is one of the coins I invested in, and there's a lot to learn from this chart because there's a good few examples here of what I've been preaching and what I am practicing in real life. Now, if you look at where this is currently trading, going back to the basis of not selling everything, well, of course, there's a reason for that. Because in the grand scheme of things, this is still trading around the all-time low region. So, of course, with so much upside potential, it would be absolute insanity to absolutely sell the entirety of my holdings, knowing that realistically, there's huge potential all the way up, somewhere potentially in these regions. So the first thing to do in these circumstances is to go to the very beginning of these buys and look at the mistakes that most crypto traders make. Now, using percentages as an example, if I get the measure tool open, from my first position here, if we were to see this increase, and just to give you an idea of what 1000% is, it would be situated somewhere within that region. And if we were to see a significantly larger push on this pair back to the all-time high, we're looking at almost 2000%. And from my secondary entry, around that region there, the second green dot, which is the recent buys in June I was discussing, 1000% is basically around that region as well. So in terms of the full upside move potential for these two coins, there's great potential, and inevitably, I believe we will get there. Now, the problem that and the issue and the mistakes that most people make is they make their buys here. Mostly, to be honest, most people don't get buys at these prices, and I would say that's one thing I really aim to always do and pride myself on, is aim to get the best buys possible. But the first mistake traders make is once they have purchased, they either continuously buy, averaging up higher, or they make a buy, they take how much they hold of a particular coin, and they start to calculate in their head, as an example, what they would have at a particular price point. And in this example, we'll just say up to here. So most people subconsciously already pre-program themselves, and it's very, very damaging to do so, that let's say you've bought 100 coins here. You've now told yourself, you've dragged this up higher, you've done the calculations, and you've gone, cool, at this particular price, I will have $10,000, as an example. That's a very dangerous thought to have, because number one, there's never a guarantee price will return back to these prices. Furthermore, you're wasting opportunities in the process, especially when the market is still giving you numerous opportunities. And I think this is a really good example because you can see I first initially took some profits here. Now, this was not a pinpoint entry, and this is a great example of patience in the market. This was up around 200% at the time, and then continued further. Now, the key is I didn't sell the entirety of my holdings. So when this went up an extra, to 500%, and essentially an extra 250%, I was still making money throughout the process. Now, you can see here, it took some time, and this is a monthly chart I'm showing you, but from entry to sell, it was quite some time. This was around June 2023, and I didn't sell again until November 2024. And theoretically, I could have probably done the same there. But as we started to break higher, do you notice that at a moment in time where, especially in November 2024, leading towards Trump's inauguration, there were huge talks of alt season, as there has been for a very long time now. But I chose to use that opportunity to sell instead. But by selling in very small chunks, I gave myself peace of mind. And this is the checkpoint system I'm discussing. Now, looking at the current regions, if I go over to a weekly time frame and we look at this a little bit deeper, at where my entries were and where we currently are, you can see with the recent strike up higher, whilst this seems very small in the grand scheme of things, it's still a fantastic game. And we can see again achieving at its peak around the 116%, with the second entry around the 100%. Now, at this region here, I've not only taken profits on the pump, but also taken more on the bullish candle here, and have now created a region where I believe profit taking is suitable up to a certain extent. Because what's the worst that happens here? If price begins to drop back down, I have now got enough protection to reinvest in this level instead of capitulating. Price breaks lower, I have enough capital to buy more, back towards my original buy prices. But simultaneously, because I'm not blinded, I'm not wasting opportunities. Because if this is to fall back down, and whilst there's no guarantee of it doing so, there's also no guarantee of it going higher. And that's the big problem that most crypto traders face. They are so fixated on the upside, they forget that the market can very well do the opposite for quite some time before we truly see these levels fulfilled. So by understanding the checkpoint system, you need to take these numbers out of your head and stop blinding yourself with what your holdings will be worth at a given price. And instead of gambling on that outcome, paying yourself every step of the way. Because what you will also notice is over here with this sell, although it went up a bit higher, which I left to run, did you notice that I left it to run? Just in case it did go higher, because I hadn't sold everything. But over time, it dropped down. And what it dropped down by was around 55%. So with what was extracted here, plus more, I was able to leverage a 55% discount to then make 100% profit, using the same funds, essentially with more added into this region. Now going back to this example up here, let's say you've calculated in your head that you are looking for, I don't know, 10K as an example. Well, as we start to look at what could go higher, if this starts to push up higher and higher and higher, I can sell some here, just using random price points as an example, but let's just say your goal is here. You do not want to hold everything out for the hopes and dreams that it will go straight up to that level. Because at every key checkpoint, and using some of the previous videos we've now created and many more that will come, utilizing key potential turning points in the market. Because when the market's moving aggressively, it can be very easy to convince yourself the market won't reverse. And even here, as an example, is a great opportunity of where pullbacks occurred to just simply reinvest at greater prices. But what you will quickly realize is if you just take a small chunk of profits out, along the journey of potentially seeing the full scope of your targets achieved, you will not have exactly what you've calculated in your head and done beforehand if you had held the entirety of it. You will have slightly less. However, you will still be making money, and you will not have much far off what you had initially calculated if you systematically scale out. This is how you guarantee yourself a win in every cryptocurrency cycle. Because most people, as an example, would set a target up here and not sell until that's hit. The next problem is, if it is hit, because of the aggression and speed, you then convince yourself, I'm going to sell here now. And then it goes up again if it does, and you convince yourself there. And then you say, actually, I'm going to hold on a bit more. And then when it eventually drops, and I'm sure you can all relate to this because I've done this many times in the beginning, as it drops back down, you tell yourself it's just a dip. And then you start to buy more. And then the market bounces. And the next thing you know, the bear trend comes in. Or to use another example, going back to, let's say, a targeted price up here, which I'll make white to represent the key target you're looking for, you're actually taking a greater risk by chancing the idea it will achieve that target. Because if that's the target you have in mind, you've held the whole way up. And if it falls short, you hold the whole way back down. So the first real step to being able to take profits is to detach from the unrealistic numbers and goals that we set ourselves. I find it far more preferable to not have a specific number in mind because it's very damaging, and it's very similar to having a timeline of saying, in 5 months price will be here. No one knows at what month, what date and what hour it will happen, unless of course you are the market makers yourself. And by adopting this approach, you are able to protect yourself and ensure you make a profit every step of the way, while still continuously making money along the way. And I can guarantee you, if you adopt this process, and by the time you get up to here, you will not have as much as you wanted. But it will be very close if you take it in intervals. You can choose a percentage or do what feels right every step of the way. Because there will be a point, it will reverse. And the best way to time the top, if you want to do so, is to scale out in intervals. In most altcoin instances, it could be every 50 cents, 20 cents, every dollar, every $100, depending on the coin. Simultaneously, it could be you could take out 10% at a time, 5% at a time, 15 or 20% at a time, until you get to your designated region. So if your buy area is here and your overall target is there, let's say you set yourself a goal to sell 20% in intervals of 5. You can create 5 levels, using technicals of course and previous price action where possible, to give yourself a rough area. You could even set sell limits. There's many ways to go about it. But the fact of the matter is, you simply cannot lose by doing this. Because the worst case scenario in my particular instance here is the market rockets without dropping. But because I have so much still left within the coins I've bought recently, plus many other coins, the only byproduct is you still make money, but you protect yourself every way. So you would have dots like this, which are sells up there, and up there. And of course, it never moves in a straight line. So by adopting this process, when the market eventually hits one of these levels, you may not perfectly time the top, but can you imagine holding this all the way, which most people probably did, and then watch this crash back to the ground? Without being perfect, you still leave a winner when the market inevitably pulls back down. And now I'll show you another coin as well. So moving on to one of the next coins that I recently purchased on a monthly time frame, a very similar concept of what's been going down over here. And you can see I've been accumulating this one for quite some time, around April 2024, and generally just accumulating around the overall low territory. You will notice there are no buys up here, there's only buys down here. Now, of course, this is done to ensure I am achieving the best ROI possible. We can see my lowest entry is up 300%. And this is also why I'm very heavily focused once again on optimizing entries. Very important, something that will probably be discussed in another video, but also something that all Innovation Markets members will likely know by now, because it's the biggest focus behind our education, showing members how to obtain entries like this. So whilst we haven't actually achieved much, and you will often notice that whilst a lot of people complain we haven't seen an alt season yet, if you get the best entries possible, you're seeing great results already. And whilst we're nowhere near where this could possibly be, I'm up on the lower end 300%. Some of the other entries are up 180, let's say, and some of the more recent ones are still up around 100% to 91%. So we can see some of the profits taken from here is a combination of all entries and another extraction of around $30,000 profit. Now this is nothing crazy because there's still significantly more than that. In fact, there's still around 100k in this particular position. But you can see here once again, I'm not going in heavy. And there's also a rule of thumb, and if we apply the very same process I'm showing you here using a horizontal tool, and let's just say up to there, that's a target of where price could potentially go. There is a great risk of buying and not selling here, because if the market drops all the way down, I've wasted numerous opportunities again, and I kind of did that here by not selling anything, expecting a little bit higher. So this is also a great example of where I haven't sold, and the consequences of that was what I had here dropped 64 from where I bought to 75%. I wasted 74.5% of potential gone, which I could have sold. So the reason I actually bought here was because I decided I need to stop wasting these opportunities because the market hasn't set off yet. I need to actually leverage this. This is a good example as well of what happens when you don't do it. You do suffer. So in this particular instance, and a bit more of an adaptation to, or an adaptation, should I say, of what happened previously, I've realized this cycle is a bit different. Things are moving slower. So instead, in this particular instance, we've started accumulating and selling. And it's once again now a win-win situation, because if the market continues to progress back down to where I bought, these profits have now protected me. And these two coins I'm showing are the sole contributing factors to the portfolio I showed you earlier. So you can see whilst the portfolio has grown very, very nicely, the coins themselves have actually barely moved. But because of the entries, I'm up anywhere from 300 to 100% on total entries collectively. Now the same concept applies here, because if I'd simply bought and not sold anything at this point, the market comes back down or goes lower and consolidates again, I'm wasting opportunities here. And simultaneously, at this point in time, if the market is to progress higher, these entries remain. And this is the real important part, because I'm not thinking about what I will have up here, and instead just knowing I will have something good because of where I bought especially. Whatever happens here does not matter because all of this down here remains paying me. It will continue to pay me regardless. And it's quite a good way to do it because a lot of people as well simply enjoy the thrill, which obviously is not how you should be investing, but a lot of people have that necessity to be within the market. And if you look at where my sell is here and on previous charts, that's actually where most people end up buying because they haven't bought at these prices and they decide to buy here. And that's of course why so many people end up capitulating and losing money because their buys are in the complete inverse of where they should be. Now there's one more example I can show you which you guys will know about, which is of course XRP, especially in the kind of 2020 COVID cycle, a great example of how we played this. But to apply the same process, let's just say using a checkpoint system. Now that I've sold here, around this region, I don't really have a necessity to go any crazier. I could consider a bit more here if necessary, but of course, I also understand there is great potential to the upside. So you don't want to ever sell too much, and it also is very dependent on your entries. If you get entries like this, and you're up 300 to 100%, profit taking is warranted. And this is where most people cannot comprehend this. Because their buys are instead here, many people will not even be in a profit yet. And if they are, because of where they bought, it may not be near the 100% territory. So by optimizing entries, you're also maximizing the returns, because whilst this is nowhere, and the average trader wants to see the moon and all-time highs taken out, I theoretically also do not need all-time highs in these predicaments because of where I bought, and I'll already be up several thousand% if so. So going back to the beginning of this video, where I showed the total percentage, let's say the total of this move from top to bottom is around 4,000%. Well, my goal is simple. My goal is not to take the great risk of holding everything, just in case this never comes through. But my goal is to buy as low as possible, whilst also ensuring I capitalize on every step of the way that potentially does take place. So you never want to use this as a basis of what you will make, but instead what you are able to capture within this potential percentage. That's one of the easiest ways I would say you should be going about things. And it's also a very simplistic way to do so because it comes down to patience and just combating the emotions of greed. Now, obviously, this is a trade and play in development, but of course, a current example is always a great showcase for you guys. And using the two most recent examples, which were pretty much aligned with the YouTube analysis provided as well within the crypto outlooks, it's exactly where I said the bottom I thought would be in, so I bought. And obviously, I think there's a risk, so I'm going to take a bit of profit. There's never any harm in doing so. The key really is just don't sell too much. You know, if I sold everything here, then I'm stupid. I deserve to lose because you're gambling. The same way holding everything is a gamble, selling everything at such low prices is simultaneously a gamble. So you have to find a fine line. And as always, looking at the idea of, oh, what if I have to pay taxes? Well, what if this was to drop all the way back down to that low and lose, let's say from here, 80%, 90%? I don't think, I think you'd wish you had something to pay taxes on at that point. So always keep that in perspective as well. But I'll show one more example, which obviously was fully documented live on YouTube during the time as well, because you can then see a kind of complete showcase of that with buys, sells, and everything else that came through. Just in case you're new to innovation markets and you weren't there during the time where we did that massive flip on XRP. So moving on to the last example, which was XRP during the COVID cycle and obviously into November 2021, etc. Now, whilst I've shown this a lot, and this was pretty much live documented step by step on YouTube during this period in time as well, and all across my social media channel, this was one of my most superior plays out of anything I've done, where a lot took place, but also a real excellent showcase of what to do in these situations. And I don't think there's a better play I've done, not just from a performance basis, but also in terms of a visualization of how this works in real time. So of course, it takes some skill and knowledge of the charts to identify particular regions, but you can see there's examples of perfect sells over here, and technically over there, but but also imperfect sells, which are great examples as well, such as here. Now, I always say this, and I need to clarify, this was a purchase for an XRP giveaway. I bought XRP here, and we gave it away for a giveaway. That was not a buy to actually buy XRP. And it makes this play look very ugly, unfortunately. But starting off from this journey here and looking at, of course, percentages of what took place from my buys on XRP at the time around 15 cents or so, you can see at the point of around the 180%, I began to take some profits off the table and took an additional amount off the table at around 228%. Now, this continued up a little bit further to almost 400% profit, but I still had a little bit running. Of course, not selling everything. Now, I took a bit of a bigger risk in this instance because I just had a very strong conviction that this was not going to sustain, and I was probably quite fortunate that it didn't sustain in this instance. But from a technical basis, it was crisp. It made sense to sell, and I was also up a nice amount. So I took the profits off the table, and then, Lord behold, the SEC stepped in, the baldy man came into play. Now, you can see whilst there was a push up higher from here to there of around 79% from the first sell, and around an additional push of 52%. It only happened in the space of a week, basically, anyway. Now, from that high to low, XRP then dropped almost 80%. From my sell, from the highest sell, 68%, let's say, and from the lower end of the sell, 60%. So this was not perfect, but yet a great example here is you don't need to be perfect, because I still would have made money if this went up. But because this dropped, and frequently it does continuously drop, I was able to once again reinvest back in the market. Not exactly where I had purchased before, but pretty damn close. And I essentially rode a wave up higher, still making a bit of residual in the process, and then reinvesting again. And what happened from here, around that kind of 23 cents region, is the market went up again, almost 200%. Saw the signs, using everything we teach in the app and showcase live, took more profits. And then again, whilst a bit more higher risk in these areas granted, reinvested back down here, because again, saw the signs we were probably going to go higher. Now, bearing in mind, residuals of this were still running in the background anyway. And by the time we got up here, especially from where the main buy went in, this was where we put in around 100k at the time, if I remember. Around this point, and I think this is arguably the best example, around 447%, I extracted more profit and took a bit more out, which is not showing on here, along the way as we went up higher. Still taking a bit out in this period here. Now, the key to understand is XRP in this cycle done around 1600%. And with my buys and sells, in this instance, I actually managed to capture pretty much all of that, 1600%. From what the total move was, because I bought and sold, I actually obtained pretty much that growth, which was obviously the 30k to 600k plus. Now, if I had not done that from its height, I would have suffered a loss in this particular cycle down to that low of around 85%. All of my efforts of buying here would have gone to complete waste. And after a period from 2020 to 2022, almost 3 years later as that matter, I would have gone from being just holding 1,130% up. Now, whilst it's all sunshine and rainbows, if I had not sold anything, I would have ended up back here 3 years later at no more than 100% gain, essentially losing 1,000% because I just didn't want to press sell. But because I did that and press sell, I was able to reaccumulate back down here for the FTX crash, as we can see. Scaling in slowly but surely, very similar to the previous plays I showed. But I think what's the most important two sells in particular are these sells here. Because these sells are a great example of how I still sold here, but yet still hodled. But because of these sells here, and this sell in particular, and a bit more that was somewhere in 1.5, 1.6, I think, because I still held some, I was protected when it did crash. I didn't sell any more here because there was a chance it would have gone higher. But this is very important because eventually, as you know, when the bull market ends, the trend will begin to shift. And once we saw the next leg down, you will then notice, because of where I bought, which is also, again, a very important aspect of this, I then used the pumps instead of buying the dip as exit opportunities to still protect myself on the way down. So this is also very important to understand as a final pointer, that this is why you don't need to perfectly time the top. Because even if I had not sold more here, I still would have been a winner, even if I had just sold there and left the rest. I still would have ended up in a far better off position than not selling anything whatsoever. So with every single one of these sells here, from even my lowest point, even if I had just sold a bit of profit here, let the rest ride and round trip back down, I still would have been in a better off position later down the line. And those years would have not been wasted. There would have been something to have shown for my time, risk, and efforts within the market, which is really the key message behind this as well. Do not let all of this go to waste. Because no matter what you believe, no matter what the narratives are, no matter what the fundamentals say, or what people on CT say, there may come a time where we don't get this anymore. And that terrifies me, but that is the reality of this. What if it doesn't give us these gains anymore? Are we going to look back and say, man, I can't believe I participated in this and didn't sell anything because I wanted more and more and more? And the same applies to the present day. But here is the best example of how, as long as you get the good entries in, you can see here was not perfect, but from 400% to 550%, I was still up that amount and still capitalized on that percentage return, despite suffering from the highs, a drawdown at that point of 50% to the lower end of almost 60%, because the buys were so much lower. So this is why you don't need to perfectly time the top. In fact, you don't need to be a hero, and I proudly show this because it wasn't crystal perfect. Look at that. The market jumped another 57%. But this is how you need to look at it, and this is how you need to calculate it. Let's say a big bullish candle came through. Let's say you sell 20% here, or let's say you are considering selling. What you need to do is get that percentage tool open. Do not be blinded by prices, but get the percentage tool open and then tell yourself, is it worth losing, in this instance, 720% for the market to increase another 56%? Now, of course, over here, from where the entries were, yes, it's a very significant jump. It's, 400, 500%. But if I don't sell, it's gone to waste regardless. So you just ensure you protect yourself. And if you hold this position and trim out more and more and more, you're still capitalizing on the entirety of the move. You're just slightly diminishing the risk factor of holding this. And of course, during this point in time, XRP didn't hit $2. So can you imagine if I had held everything and told myself at $2 I would sell it all, and then it never came? Everything would have been a waste. Because it wasn't really until 2025, 5 years later, that XRP then went on to exceed these levels. So that would have been 5 years of sitting there, emotionally prone to the market, when with one simple buy, at a suitable price of course, even without perfection, you would have been able to have leveraged that lower. And that's really the beauty, because even if you sell a little bit here, you can then sell later when the market reverses down, as long as you don't do what most people do and buy up further. Now, there's of course many more ways to look at this, but I think showing this is arguably the best way to explain my message with real examples, and also showing you why it's completely plausible, and also what it looks like when you actually do it, and the positions you put yourself in, and the benefits you give yourself by doing so. It's something that you don't really see talked about much on social media, and especially on YouTube. Everything's just about buying, and this coin will make you 10x or 1,000,000 and 1,000,000,000%. But I haven't really seen much content out there, especially on crypto YouTube, discussing the ideology of taking profits and actually making money from this market. Unfortunately, most people that create content, especially surrounding cryptocurrencies, it's entirely based on a principle of just buy. But no one tells you and shows you how to sell or what the benefits are of doing so and what it looks like, which also raises the question of if many of the people that preach all of the stuff they do are actually even realizing any gains. You know, my morals are, and maybe everyone doesn't agree with this, but my morals and principles are I'm not here for nothing. I am here to get what I can out of this market whilst the going gets good, because tomorrow is not promised. And I think if you can achieve this in the way I'm showing you, and remember that most of these dots that I've shown as sells are not me selling the entirety of my holdings, even if you slowly diminish your holdings every step of the way higher in the checkpoint system shown, even if you don't reinvest, you're going to leave a winner. Because when all is said and done, there's always a high probability it goes back down to the ground level anyway. History has shown us that. So whilst we can believe this time is different, just think if you're wrong about that, you will have nothing to show for it. Ironically, that's what scares me. What scares me is not selling my coins and the market goes higher, but what scares me is not selling anything and the market goes lower. And if you can carry that trait and thought into your investing, the fear of missing out on the money you've already made, not the fear of missing out and buying into pumps, but the fear of missing what you had, that's a terrifying thought. And hopefully this video will assist you in waking up to that reality as well. I hope you enjoyed.